You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we're checking in with Paze, the digital wallet company owned by Early Warning Services. Eric Hoffman, the Chief Partnership Officer for Paze. Speaking of partnerships, they've announced some pretty good ones and very interesting ones recently, one of which is with our friends at Payfinia. And Keith Riddle, the general manager, is going to be joining us in that conversation, talk about how they're going to be working to bring Paze to credit unions as well. I think it's a good chance for me to finally give a little bit more detail. We mentioned this last week. Our next CU Town Hall is going to be a little bit of a special event. If you've noticed already, and if you haven't marked your calendar, Monday, August 18th, which is a special date and a special time. We usually do these on Wednesdays. This is Monday afternoon, August 18th, 3:30 p.m. Eastern Time, 12:30 Pacific. And we will be broadcasting live from, I shouldn't even say broadcasting, participating. This is not a broadcast. This is an interactive event. Live from the Strategic Growth Conference, America's Credit Unions event in San Antonio. John Best will be on site. I'll be joining remotely. We'll have some other folks on stage with us and hopefully getting a good bit of conversation going in the audience as well. We're going to take a little bit of a different approach to the format, coming up with some kind of controversial topics and kind of saying yes or no. Where are these likely to go? I think it's going to be a lot of fun. Everybody is welcome to join. You do need to register in advance. It is free to join. These run, as you probably know if you've joined us before, for roughly an hour. If you go to cutownhall.com, you can kind of see what we're talking about by watching some of the replays of the past ones, and also requesting an invitation to join us then on August 28th, Monday afternoon. Hope to see you there. In news this week, the one that I'm really following, yet another twist in the winding road of open banking. And this one, I think, to extend the metaphor a bit, this one may be a bit of a blind curve, because I'm not sure where this is going at this point. The CFPB announced it will, quote-unquote, substantially rework Section 1033 and the rulemaking that was, quote-unquote, final back last October. And what they're saying this time, after that last exercise, which took quite some time, this one will be an accelerated rulemaking process. And I'd love for someone to explain to me if there is such a thing in the books or if they're kind of making that up as they go along. I'm not really sure what an accelerated rulemaking process is and exactly if that was available, why we haven't done it sometime before. They also point out this is a little bit of a slap at the prior administration, that it will be providing robust justifications for their actions. So as a reminder, this all comes after some lawsuits that were filed, particularly by the Kentucky Bankers Association and the Bank Policy Institute, saying that CFPB had exceeded its authority in the way they approached the open banking Section 1033 rule. And when the Trump administration took over and took the lead at the CFPB, they said, you know what, you're right, we agree with you, and we're not going to defend the lawsuit. Then a group called the Financial Technology Association stepped in, said, not so fast. We still think it was a good idea. We have standing because we represent the fintechs on the other side of the open banking situation. So that continued. And then the new way for the CFPB to change, they said, we're just going to redo the rules. So it's kind of moot to be talking about this old rule because the old rule is not going to remain in effect. The Financial Technology Association said, okay, that seems fair, and we will not argue. The court case has now been stayed, so that goes away. And again, another quote from the Financial Technology Association, they will participate in good faith in the rulemaking process. So what that new rule is going to look like still remains an open item. Some of this probably also got prompted, I'm sure you saw, and we're going to post links to a couple stories around this, by JP Morgan Chase's announcement that they were going to begin charging for open banking through an access fee schedule that was going to take effect as early as September. I'm not sure if that's still the case now or not. Basically saying, okay, we've been working with a lot of these companies providing open banking data. Guess what? Starting in September, these charges are going to apply. And apparently, I never saw the official numbers. They were big enough to really dramatically change some business models. So whether and that rattled some ruffles some feathers, I believe, from what I understand, in the administration, not just in the fintech community. So what this is going to look like, and again, I never thought that the original rule was perfect by any stretch of the imagination. The idea that there wasn't at least the opportunity for cost recovery from financial institutions for sharing this data was a big one. So I think JP Morgan Chase kind of forced the issue on that, whether intentionally or unintentionally. And Jamie Dimon's not one to back off from a fight. So it'll be interesting to see exactly how that piece plays out, as well as the rule itself. Again, more to come on that one, like always, and we'll see where that heads. But lots going on in that space, lots more to come. Check our show notes along with the episode, and you'll find a couple of resources if you haven't read more about that already. Another one that I heard this week that I thought was really interesting, on NPR's Planet Money, a weekly program that you may be familiar with, they did a feature on Fortuna Bank, a de novo startup in Columbus, Ohio. I thought this was a brand new story when I was listening on air. Turns out when I went to the website, this actually was originally posted in March. So it's not 100% new information, but frankly, it was new to me. And it's about the notion of how to go about forming a new de novo bank. This one is particularly interesting in that it is woman-owned. It is a female entrepreneur with a background in lending who decided to go after this, hired somebody else, another woman to run the operation. And it's a female-focused firm focusing on female entrepreneurs, looking to help provide more access to credit and business services to them. The conversation really got down to, okay, what is a bank all about? What does it mean to start a bank in this day and age? What are the regulatory challenges? And why are there so few new banks starting while we're losing so many banks? Which, again, harkens back to a conversation we just had a couple weeks ago with Denise Wymore from the CU De Novo Collective. And this conversation was around banking, but it clearly applies in both cases. Denise gave us some pretty stark statistic about how few new credit unions have been starting up. And it appears that the number in banks is virtually the same. And it all changed kind of overnight. We were always losing more banks than we were gaining, and credit unions as well. But after 2008, the new institution startup rate pretty much slowed to virtually zero. So it's just, to me, it's just interesting to see how topics like this are portrayed in the general press. If you call NPR the general press, it's still somewhat of a selective audience, including getting into the conversation with this entrepreneur about their exit strategy and just really being frank about what would likely happen to this bank if it were successful in terms of some kind of a founding or an acquisition or something like that in the coming years. So I'll post the link. It's about a 25-minute listen, and I think it's worth your time just to get a perspective. And it, again, applies to credit unions, I think, equally well. And we'll post that link to our conversation with Denise Wymore, too. And somewhat related to that, Maxine Waters in the House of Representatives introduced Bill H.R. 4544, the American Access to Banking Act, again, bringing up some of these exact same points about the lack of new startup organizations and financial institutions. It's in the early stages. And again, this is one that Denise Wymore brought to my attention, and it has passed the House Financial Services Committee. Still a long road ahead, basically asking both bank and credit union regulators to look into making it easier to start. And the conversation we had with Denise is it can be very, very opaque trying to figure out even what you need to do to make those kind of things happen. So again, more details about that in the show notes. Let's get on to our main attraction. We've interviewed the leaders of Paze now each of the past 2 years. And I've been curious to see what they've been up to. The last time we connected was at Money 2020 this past October. And frankly, I've felt like they've gotten a little bit quiet since then. And then that was until recently. And they've had a couple of announcements of new partnerships with WorldPay and with Fiserv, and also with our friends at Payfinia, as I mentioned, to help bring CUs into the fold. We'd spoken to Keith Riddle before about some of the things they've been doing with real-time payments. And one of their kind of marquee clients, Star One Credit Union, is actually signed on now to go live with Paze. So I thought it was a great time to check in with both of them. Eric Hoffman, the Chief Partnership Officer of Paze, Keith Riddle from Payfinia. Let's have a listen. I'm here with Eric Hoffman, the Chief Partnership Officer for Early Warning Services. One of those services includes Paze, which I'm assuming people are very well familiar with, as well as Keith Riddle, the GM of both Payfinia and the Payfinia QSO. You're both working together on a partnership. Speaking of chief partnership officers, and more broadly, I'm just hoping to get an update on exactly the status of Paze, which is obviously a digital wallet which has a very high profile, a very strong kind of value proposition from an installed base standpoint, and trying to see where it's going from here. So, both of you, Eric, Keith, thanks so much for taking the time.
Thank you for having us both.
So, Eric, let me start with you. I mean, obviously, you're looking at a two-sided market that you're trying to launch, which is always has its own little challenges. You've got to bring the merchants on board and actually equip them to pay, to accept Pays as a form of payment. And at the same time, you've got to get the consumers on board to actually use Pays. It seems like you're doing a pretty good job of addressing both ends of that. You've got recent announcements you made of partnerships with Fiserv, which brings more of the financial institutions to the mix, as well as the owners of early warning systems, obviously, too, some of the biggest banks. And then WorldPay, you have a deal with WorldPay to actually bring their
Mhm.
merchants on. Can you talk a bit about how those two sides are kind of lining up right now?
Yeah, great way to start, Glenn. Thank you for that question. You're exactly right. For us to scale pays to the heights to become competitive with the existing digital wallets, we're very busy standing up both sides of the two-sided network. We're very fortunate, early warning being owned by seven banks, the four largest in the US. With those seven banks, they're all issuers both on debit and credit. And six of the seven have merchant services businesses where they're providing credit card processing, debit card processing to merchants of all sizes. So working directly with our owner banks, we've made great progress over the last few years as Paze was officially launched in September of 2024. And we're super busy working with our owners and extending out to non-owners to expand our reach. So the owners are doing a phenomenal job. We've already made over 150 million cards available in Paze for consumers to claim and to use where Paze is accepted. And we've launched dozens of large national brands, including Fanatics, 1-800-Flowers, Sephora, and others. And we've also have launched over 85,000 small businesses through partnerships with Deluxe, GoDaddy, and then with the hosted pay pages of our owner banks. But to truly drive coverage, both on the merchant side and on the issuing side, we've had to extend outside of our ownership reach. So to your point, we signed and announced the partnership with Fiserv. Fiserv being a massive global player on both issuing and merchant brings us tremendous scale. On the issuing side, Fiserv already has over 2,200 banks on the Zelle platform, and we hope to replicate that success on the Paze side as well, where they'll be signing up their financial institutions, both big and small, so that their cards can be made available in Paze for their bank's consumers.
And
On
just
the
if I could
merchant
just to remind people very quickly, Zelle and Pays both jointly owned by Early Warning. So I think Zelle is a pretty good kind of blueprint for kind of the approach you're taking, right?
That's exactly right. Zelle, we just started our eighth year of Zelle in 2024. We moved over $1 trillion through Zelle. That's 3.6 billion transactions. It's 500 million small business transactions, and it is the number one P2P service in the United States. We use that as an example of what early warning can do with our owner banks and extending out to non-owners through channel partnerships. And we're really replaying that script to scale Pace. So going back to Fiserv on the merchant side, Fiserv has tremendous scale, both enterprise, mid-market, small business, and even micro. So we're very busy right now working on technical work with Fiserv to enable all their platforms with Paze. They're already live today with Commerce Hub, which is their go-forward enterprise platform, and they'll be adding Clover, UCommerce in the Q3 of this quarter, which will enable not only some very large enterprise merchants, who we're excited to announce soon. It will enable, I think, 75,000 small businesses as well. We also announced the partnership with WorldPay at the Rethink conference just a few months ago in Texas. WorldPay is one of the big three on merchant acquiring in the U.S. market with Chase, who supports Paze with Fiserv that we just talked about, and now WorldPay. WorldPay is also very busy in technical work enabling their e-commerce platforms, which will launch this year. And we will be announcing some very large national partners that will be first with WorldPay. And then coming in 2026, their small business hosted pay pages will launch, and we'll see hundreds of thousands of small businesses coming onto the platform as well. Our partnership team is very busy extending out beyond Fiserv and WorldPay, and we're going to talk about Payfinia shortly. But we expect to sign more channel partners this year. That's going to extend our reach, and we've already signed a few additional national issuers, which we haven't announced yet, but will when their cards are available in Paze, and the consumers can check out with their cards when shopping where Paze is accepted. But
Kind
we're
of a
really
funny,
excited. Go
excuse
ahead.
me, sorry. Kind of a funny kind of just brain cramp on my part. I was thinking of Fiserv solely on the FI side. I totally forgot. You've obviously got them. So you're working with them on both sides, on the merchant enablement side as well as the issuer enablement side from a card standpoint.
Yes, 100%. They're leaning in heavily on the merchant side. We're very busy meeting with Fiserv with their customers. We'll be attending the Fiserv Forum the last week of September in Las Vegas and meeting with a lot of their partners, both on the issuing side and the merchant side. So we're very enthusiastic about the Fiserv partnership because they support the two-sided network, and they're huge believers in the principles around Paze, and they really see it as a competitive advantage in the marketplace on the merchant side to be able to bring Paze to their merchants.
And just a reminder, the Paze solution is solely focused on online commerce, correct? It's not a point of sale app. It's for digital wallet of e-commerce, correct?
That is correct. It is e-commerce solution today. And you can see Paze both online on web transactions and in mobile. We launched earlier this year a suite of services for mobile APIs and supporting passkeys for the safest, most secure way to check out during a mobile checkout experience. And we really like mobile. You see a lot of daily transactions, high frequency, whether it's your morning coffee or afternoon lunch or a ride share. We really like the high transaction volume of everyday spend that you see in those mobile experiences. So we're very focused on a lot of the leading mobile app-based experiences that consumers use each and every day.
Mm-hmm. And I mean, you mentioned 150 million plus cards that have been, preloaded into the system, which I guess most of that, I mean, basic 80/20 rule are your owner banks, but obviously there's the long tail of another, 9,000 more institutions out there. And I guess that's where folks like Payfinia come in as well as Fiserv. And Keith, you've got the news. I know you've worked before on some kind of cutting edge projects with Star One Credit Union. And I believe the announcement here was that you've got the partnership also set up between Paze and Payfinia, and Star One's going to be your first in-market credit union.
That's right, Glenn, and thanks for having me. So to carry through what Eric had indicated in terms of that two-sided network, Payfinia, with Star One being that first financial institution to launch Paze outside of the owner banks. So they'll be the first community FI in that longer tail that's been referenced to actually enable Paze services and digital wallet offerings to their membership base. So a couple of key things that we're doing as part of our partnership. Because of our affiliation with Typhon as a digital banking provider, which is the digital banking framework for Star One, we were able to collaborate with Star One to embed the aspect of a workflow so that the member can claim their digital wallet in Paze through the financial institution's digital experience. Key part of the enablement process allows them to leverage that at these e-commerce locations that Eric has indicated. So we represent the aspect of knowing how to accept all of the data that the credit union needs to contribute as part of eligibility of users, managing that in a very secure fashion. We actually deployed a confidential computing overlay service into our platform so we can accept that data and fully protect it because it is online banking user data, card data, and some fraud data. And then through the API enablement we have with EWS and the Paze service, we act as the conduit to provide that information when the wallet is invoked at an e-commerce site. So I think that we're a critical part of the delivery system because we're bringing in the tail of issuers, and we certainly understand and respect the fact that Fiserv has a strong position with financial institutions, but there are many financial institutions that use best of breed for digital banking and their core, and they're looking for a independent enabler of services for instant payments, embedded digital wallet services, and other services that help them to modernize their payment and digital wallet offering to their members or customers. So that's the community FI segment we're focused upon, and we're proud to be affiliated with Star One and their innovation journey and being that first community FI to enable Paze.
And first, I'm assuming Star One is first of many. You've got a pipeline starting to kind of develop as far as additional FIs, not just credit unions, right?
Not just credit unions. So we have community bank clients that are interested in the solution as well, and some larger community FIs that fall within the category where they have been best of breed with digital and core, and they're looking for services that help them to innovate more rapidly and can plug in or fully embed into their existing digital framework, such as we do with instant payments and other services that we offer. So yes, it's a healthy pipeline. We probably have 10 to 12 financial institutions right now that are actively engaged. And I think all the announcements that Eric has referenced, whether it's on the acquirer side or the issuer side, help to drive that awareness and momentum in the marketplace. So we're the other side of that marketplace, trying to bring the issuers into the opportunity of all the merchants that will enable Paze. And I'm actually a Paze user. I've enabled through a couple institutions. So I've used it on 3 occasions at Fanatics. It's a fantastic experience. I look forward to all the enhancements that Eric has referenced, and the fact that it allows the institution to have their card positioned, regardless if I've enrolled through some other institution previously, and look at it, all of my cards in a single wallet. So a lot of convenience for the consumer and awareness for the issuer.
And just to remind people who are not familiar with Star One, I mean, we're talking about obviously not the size of the owner banks, but we're talking about a $9 billion organization. So
$9 billion credit union. They have 130,000 members, but it's where they're located, and the membership profile is very important. Silicon Valley, high degree of expectation and digital experience and convenience. And the pilot that we went through with Star One was very successful, a lot of positive feedback.
And the nature of their member base is exactly the reason why they tend to be, kind of first movers. Eric, to that point around the folks at Star One or any place else, Paze Pulse, you did a consumer survey out here, really trying to understand what the hurdles might be to getting involved in a solution along these lines. The preloading of the cards becomes pretty essential, right? That's, I think, one of the things you found that, rather than having to go back and enter the credentials, having it pretty much kind of almost as a one-click activation is a pretty important component.
Yeah, you're right, Glenn. It's a real competitive advantage for Paze, where there's no provisioning that's required by the consumer. When if their bank is on the Paze platform, whether it's one of the owner banks or one of the banks that is supported by Payfinia, when you are at a merchant's location and you're checking out with Paze and you click Paze, all the cards that you have that are been preloaded by your financial institutions will appear for you to choose which payment device you want to check out at that time. And it's no extra apps. They don't need to download or have a separate app. You don't have to
It resides
provision
within
a cards.
it resides within the financial institution app, correct?
It does. Exactly. Exactly. So it's a real speed to checkout opportunity for consumers, and we provide plenty of information if folks for the first time want education or have questions. There's information during the checkout flow, or once you have claimed a card in Paze, it's a very simple checkout process. And I think Keith had talked about his experience in Fanatics, which has been in market with Paze for about a year now. We've seen tremendous results. And we're doing a lot of consumer incentives with Fanatics as well to drive those transactions and first-time users.
That was one of my questions. And somebody like Fanatics, I know they were offering those promotions. Basically, if you choose this as your checkout methodology, you get a discount. So, are you finding that that's usually the inducement to get people to first trial the product, or is it something that comes more from the issuer that's saying, "Hey, we got this new thing out there. Get it active for the next time you hit one of the merchants"?
Well, interesting enough, even with the success of Apple Pay, our bank owners have told us that, there's 50% of iOS users who are not using Apple Pay. And we know that mobile wallets on the Android side have been extremely fragmented. So our total addressable market for Paze is significant. And we are very comfortable with either the bank itself initiating that relationship with their customer, their consumer, on engaging and claiming their wallet through the bank channel, or if the consumer experience is all driven through the merchant checkout experience. We are leaning in with incentives because so many consumers have yet to declare any loyalty to a mobile wallet. We think that providing a consumer an incentive to pay with Paze, have a great experience, and then they'll see Paze tomorrow when they pre-order their coffee, or the next day when they're on a major, big box retailer, and you really start to see that habituation by consumers where they'll start paying with Paze each and every time they come across Paze at checkout. But enticing them with an incentive on that first transaction has been received really well by the consumer.
And that
And
tends
we
to be
do,
that tends to be a merchant incentive. It comes from that side.
we work on, each of these merchants in addition to the issuing side and the bank side. These are all partners. So we really try to understand their brand, how they like to communicate discounts or offers or shipping or whatever the incentive is based on how they believe that their customers will react to selecting a new payment tender to check out. So it's a highly collaborative effort, and each relationship with the merchant is somewhat unique. And we really invest time into understanding the merchant checkout experience, where we can place the button, making sure we have button parity against other checkout options, and that we really optimize the Paze experience. And we think incentivizing consumers on that first transactions is a good investment for Paze.
The other thing I remember from the consumer research you've done around the Pays Pulse, and again, this kind of ties again to Zelle, is what I'm recalling seeing is the level of trust of engaging in this through the financial institution. I think you had some data about people's preference to actually run their wallet through their FI relationship.
Yeah, 100%. Really, one of the core principles around Paze is trust. This is a mobile wallet brought to you by your bank, and consumers trust their bank. And we have seen that time and time again with Zelle. If you look on the Zelle side of how many folks are on the sidelines not using a P2P service, they didn't want to create an account with some unknown brand versus their financial institutions. Once Zelle became integrated in the mobile banking experience, consumers trusted Zelle, and we've seen it grow like a rocket ship. We take those learnings and we apply it to Paze, where Paze is brought to you by your bank. You trust your bank. The consumer will trust Paze, and we'll keep leveraging that as a messaging, part of our messaging to consumers to drive consumer adoption and everyday transactions.
And it seems to me you're not only competing with third-party apps, you're competing with continue as a guest. There's always that option too, right? And it's just kind of laziness, so inertia.
Well, guest checkout and key entering, merchants will tell you that they can tell when consumers abandon the transaction, or if they don't have their wallet, with them. So you really want to capitalize on those inspirational purchases. Maybe you receive an email with a message that says you can pay with Paze at Fanatics and receive 30% off, and you're during your commute and you don't want to take your cards out and key enter credit card. But through the Paze experience, you get high level security. It's a fully tokenized transaction. There's no risk of fraud or theft. And most importantly, you can check out fast. So, certainly we are going after the guest checkout and having a much better consumer experience with a high level of security.
Yeah,
Yeah, and Glenn, I guess to add on to that, those are some of the key benefits that are being communicated to the issuers as part of the engagement when they ask why pays. They know their consumers go through a lot of friction if they don't have a PayPal experience or don't want to download a separate app. They aren't using Apple Pay as part of their or any other wallet as part of their checkout experience. So that means they're going to a guest checkout page, putting in all their card data, putting in all their CVV data, which creates some security concerns for them as they go through a checkout experience. So if you address the security elements that Eric has outlined in terms of the tokenization of the transaction, make it easier when I select Paze as a checkout method that I enter that token that allows me, or that credential allows me access to all of my cards, allow me to select those as part of a consumer without key entry. It follows all of the aspects of greater security, trust, and streamlined checkout, which is the trifecta of bringing all the FIs, the merchants, and the consumers together for a more effective checkout process.
Yeah, I mean, it seems that I'm not sure what the percentage is, but a fair number of consumers, when you got 150 million cards out there, are going to have more than one card in their wallet that is going to be preloaded. So I
Okay.
assume that when you're working with a merchant, that and it comes from the merchant side on an activation, it automatically populates every card that they have available. Is that the way it works?
It does. If that financial institution is part of the Paze network. And, Payfinia is super important to us, as is Fiserv. But we, have a long-term goal of making sure that all cards, both debit and credit, are available in Paze, so that consumers can use the card of choice when they're checking out. And, same thing on the merchant side. We want to get to 100% acceptance as quickly as we can.
Let me ask a little bit of the candid question of what was on my mind is kind of bluntly, I would have thought, it seems like you're doing all the right laying the groundwork and the foundation, but I would have thought by now, especially after last year, you were already in market by holiday season. I thought you'd be a little bit further along. Now, again, it's always just the challenge of the two-sided market. And I also know that it took Zelle a little while to get going. And then, like you say, the rocket ship eventually just took off. But how do you assess, here we're coming up on another holiday season. Any thoughts about where you think we might be heading over the course of the rest of 2025?
Sure. I think there was great anticipation with Paze launching. The early years was really, focused on the build. Our national brand coming out party was just last September, just about the time that I had joined. So I can really only speak for the last 10 months, and I think we have tremendous momentum in the marketplace with partners like Payfinia and Star One, and of course with WorldPay and Fiserv, and a lot of the momentum that we have with merchants that will be coming online in time for the holidays and into Q1 of Q2 next year. So I'm thrilled about the progress and really excited for what's ahead of us.
And you both have opportunities to show off these wares in the marketplace. You mentioned already the Fiserv Forum coming up in September, Eric, and I believe you'll be at Money 2020 as well. I know where I visited with Paze last year, you had a pretty good splash on the exhibit hall floor.
Absolutely. All year we've been making the rounds to the conferences, and I'm a firm believer in partnership in this industry, and that's the basis for this call with Keith and the Payfinia team. And we will be at the Fiserv Forum the last week of September, and we'll be at scale at Money 2020, and we'll be focused on the biggest conferences and networking opportunities in 2026. So we're really excited about the upcoming events and meeting more partners both on the issuing side, the merchant side, and channel to help us with distribution of the two-sided network.
I'm assuming that we probably have more financial institutions than merchants, listening to our podcast here. If a financial institution isn't interested in getting involved, is the best way to go through their partners, their Payfinias, their Fiservs, the folks through whom they're actually making these connections, or do they get directly in touch with you?
They can get in touch with me. There is technical work at the platform level. So most of the owner banks have done, their own work, but also requires some back end support from an issuer processor, whether it's, a TSYS or an FIS or Fiserv or a Payfinia, which is part of the work that we've been doing both on the merchant and the issuing side, is building the technical rails to allow scaling of both issuers and merchants. But they can contact me directly. Happy to put them in touch with the right people, or they can contact their issuer processors for guidance on launching Paze.
Got it. And Keith, I know you've got Payfinia on stage coming up at Finovate, and not particularly on the Paze solution, but I don't want to give anything away. I'm not sure if it's supposed to be a secret, but I know you've got some interesting new capabilities. You'll be showing up in New York City as well.
We are, and I won't do too much of a preview on this session, but it is going to be about an extended embeddable service. It allows for accelerated money movement, and certainly is a byproduct of what we did with Paze from an integration perspective. But to Eric's point, we're going to be involved in a lot of those conferences, whether it's Finovate or FinTech Meetup or others, and certainly demonstrating our capability to help those community financial institutions who are seeking a path to Paze enablement.
And I assume that any institution who wants to understand how you might be able to enable the process can reach out payfinia.com.
Payfinia.com or keith.riddle@payfinia.com, and we're happy to help them understand the aspects of enablement.
And as I recall, Eric, Paze.com actually gets to an option of consumers, merchants, financial institutions, and you can pretty much choose your own adventure there.
Yes, absolutely. And of course, eric.hoffman@earlywarning.com is also available, or as many people do, you can hit me up through LinkedIn.
Perfect. Eric Hoffman, Chief Partnership Officer for Early Warning Services, which of course includes Paze as well as Zelle. Keith Riddle, GM of Payfinia and Payfinia QSO. Thanks for taking the time. Looking forward to seeing you out there on the circuit.
Thank you, Glenn.
Thank you, Glenn.
So I thought I heard this in the conversation, and I wanted to confirm it after the fact. And sure enough, what I'm told is Star One will indeed be the first financial institution, bank or credit union, outside the early warning ownership and the Paze ownership group to go live, which is quite a statement. I'm a little surprised that it hasn't gone deeper. Obviously, 150 million credit cards preloaded is nothing to sneeze at. And credit card issuers and banks don't necessarily, they're not exactly a direct overlap. So you've got a lot of other credit card issuers potentially in the mix as well. And we've already scheduled another update with Paze. They will be at Money 2020. And actually, at that point, I've been told their general manager, Serge Elkiner, will be there. And I've already made arrangements. We're going to catch up with him then. And I understand they've got some other promotional pushes and things going on between now and then. It's not that far away. Was it 3.5 months at this point? So if you have any other thoughts, if you've been following along, I certainly will be with what Paze is going on. We'll get another update from them just in the not too distant future as we head into the heart of conference season around here. With that, another episode of the Big Cast in the books. My name is Glenn Sarvati. You can track me down via my firm 154 Advisors. You can find more about the Best Innovation Group by checking out the website big-fintech.com. And you'll find there, if you go to the media tab, all of our back episodes of the Bigcast. We have new content here pretty much on a weekly basis, and I know we will next week as well. If you want to track me down, you can always do so on LinkedIn. You can find John Best or the Best Innovation Group on LinkedIn as well. We're also active on Blue Sky, LinkedIn. Find us wherever you happen to be out on the road too, because we've got a heavy conference season coming up. With that, I hope you check in, please, wherever you get your podcasts, Apple Music, Spotify, etc. Like, subscribe, and get an alert. So when we have the new content up every week. And next week's, again, we've got, I forgot the other one that I always go to in September, Finovate. And that's what we'll be talking next week with Greg Palmer, the MC on stage there, about what they have in store this cycle. Until then, thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.